Since we're trading futures, definitely make sure you pay attention to the disclosure. All right, you guys. Let's see what we can pull out for today. So, if you remember, this is basically what we were trying to anticipate. Bullish bonds, bearish yields, which then leads to potentially bearish DXY. Okay, so let's see what happened. Bullish bonds, bearish yields. What has that done to DXY? That has made DXY reach lower, just as anticipated. All right, so where is price reaching for? In my opinion, NFP, or just this week's delivery and price anyway, is likely to reach down below this, or below this low. We've already taken out previous week's low. Now, what's in the crosshairs? Previous month's low. So we'll see how things transpire. Remember, it's NFP week. And we discussed the protocol that we need to be having, or like the perspective we need to be having. So yeah, let me do something. So yeah, right, so everything that we have talked about, again, is coming to fruition. Can you tell me if you hear me real quick? Oh, whoops. So yeah, and again, we also we got a news event coming out at 7, so we may have kind of a lagged effect pushing us into that 7 o'clock time. See, there's nothing to be excited about just yet, obviously, and we are never in any type of rush. So so yeah, I hope y'all can hear me okay. But yeah, so that's essentially what we're looking for. So remember how I've been talking about consolidation. I say this a lot in the private community, but when we're in the equilibrium point on a higher time frame perspective, generally that creates consolidation, and that is being held true here, right? You can kind of see how that took place, right? That goes for every time frame when we're in the equilibrium, because price likes to hold at that mid area. All right. So, and again, this is the perspective right here: bullish bonds, bearish yields. Have we seen that? Yes. Right. Bullish bonds, bearish yields. Has that translated to the DXY? Yes. Right. Bearish yields leads to bearish DXY. And then what's that supposed to transpire to in terms of the indices? Well, the indices have dropped lower, which is ideally what we'd like to see, right? We want to see price go lower to go higher if it's bullish. All right. So, yeah, with that being said, I mean, we could observe this wick here. We flip through, we can kind of see how the weekly fair value gap's being respected for the NASDAQ. And of course, the Dow has some pretty heavy delivery. So we'll see really what happens. The Dow generally does whatever the hell it wants. And again, it's NFP. So if we do get proven incorrect, or if it goes the opposing direction, you know, it happens. But again, I'm on the side of what we've discussed. If we continue to see bearish yields, bullish bonds, that should in turn relate to or translate to bearish DXY, because that's just the intermarket relationship. That's just how things operate. So yeah, something you guys should probably pay attention to as well, which I show my private community a lot, has to do with the risk on, risk off relationships. So if I go pull that up for y'all. So yeah, I'm gonna pull this up. I want y'all to screenshot this relationship here. Well, let's see, stretch that out. All right, so screenshot this, because if you're trying to validate or verify a trend, this is one of the tools you use, right? Because remember, everything that we've discussed in the last couple of lives, pretty much in the entire, time I've been doing live so far, has been to try to give you elements to try to learn how to trust your bias, right? So take a screenshot of this if you haven't already, and if you missed it, you can always go back and take a screenshot later. What is happening? All right, so yeah, with that being said, if you could confirm that you can hear me, that'd be great, just so I know, unless I have to change or adjust something. I'd really appreciate it. Yeah, definitely let me know if y'all could hear me. I'm gonna just wait on your guys' message in the chat. Okay, for sure. Appreciate you, Jones. I was waiting. I was like, shit, I don't want to pour into something and have y'all not hear me. So yeah, so if you guys have paid attention to the forecast and the things I've been discussing, again, like I said a minute ago, everything seems to be falling in line basically with what we've assumed. That is bullish bonds, bearish yields, which should translate to bearish DXY. And we can kind of see the narrative potentially playing out here with it potentially reaching for this drawn liquidity for the weekly. That being, these equal lows here. This is a previous month's low. Below that, we have this weekly fair value gap. Let me change the color real quick. I always want to color code your stuff because it's a pain in the ass. If you're looking at lower time frames and things are just not clear, it makes your life harder. So definitely color code everything. But yeah, so with that being said, we called for bullish bonds and bearish yields. Okay, and that's what's happening. It is NFP week, so that's why things are a little bit shady in terms of the delivery with the indices. Okay, we see indecision candle, right? We see things dropping lower. In reality, we want to see, if we're bullish, we want to see things go lower to go higher. Okay, because that's power 3. Power 3 is basically how the market operates. No matter what model you use, you're going to want to understand the dynamic of power 3. It's a little bit busy, I know, but I'm trying to make sure you guys see. We also have this new week opening gap here as well, and we can kind of see how that's been being respected. So yeah. So if we move down to the daily chart, we can kind of see how we may be having another significant signal sharing insights as far as whether price is going to go lower or not. This here can act as an immediate rebalance if we do start seeing price start to confirm or start pushing as we approach the different open time windows for the AM session in New York. This immediate rebalance, we've already taken buy stops, we've shifted market structure again, okay, and now price dropped, is now retracing, while we see the indices also retracing lower, right? So DXY is retracing higher, indices are retracing lower. So that's exactly what we want to see if we want to find DXY going lower and the indices to go higher, because they drop lower for power 3 to try to scoop up sell stops or push oppose to what the overall direction is going to be, so they can not only engineer liquidity in the opposing side, but also sweep up liquidity, right? They engineer it, they manipulate it, get people thinking it's going to go one way, and then they turn around, right, and then go the way that they're intended to go. Things are obviously in a range right now, right? If we go from this low to that high, we could see we're at equilibrium. Or if we go from this low to this high, this is the most recent fractal low given this range after the acceleration. And we can see that we're at equilibrium here. So again, like I said earlier, and like I've said multiple times the last couple of sessions, when we're at equilibrium, generally that can present us with consolidation. So being that could be the case, being the fact that it's NFP, we got to be very patient, and we have news at 7 o'clock, and we're not going to be too trigger happy, at least for the time being, because we need things to fall in line, because we don't want like a tiny chunk. We want to get in line with the bigger move. So one, we have more opportunity, and then two, right, it's more excitement, and we won't have to be so antsy about whether price is going to move or not. And in order for us to be in a position when price moves for the actual move, we have to position ourselves with time. Not only PD arrays, not only our setup, like a framework, but we also need time. Because your model can show outside of a kill zone, outside of a macro, but because it's outside of the time that's programmed for price to move, which has been pointed out by ICT many occasions, you can get stuck in consolidation. Or if you're trading before the 6:30 open or 9:30 Eastern, you're automatically trading inside of the time window that manipulation takes place for the AM and PM session, or for the New York session as a whole. All right, so very, very important yet boring perspective in terms of price navigation. Something a lot of people don't talk about. People mention manipulation, this and that, but a lot of times they're not paying attention, or even, a lot of them don't know about this specific thing. And again, I stated this before as well. If you're in trades and then later on in the day, right, price takes off in your direction, but before that you get stopped out, this is pretty much the reason why. That plus the macros. What are fractal swing highs and lows? And what indicator do you use? Okay, instead of me having to dig into like a whole lesson, because we're looking at live price action right now, about fractal highs and lows, you want to go look at ICT's high probability scalping series, and you'll see him describe the importance of fractal highs and lows. But to keep it short and simple, a fractal high and a fractal low is something like this, a 3-bar pattern, and the indicator that I utilize is called Fractals by Nephew Sam. And the reason why this one in particular is used is because if you see here, filter 3 or 5 bar fractal, and the 5 bar is the traditional fractal. But like ICT says in that high probability scalping video, where he describes the importance and the use case of fractal highs and lows, which has many use cases from bias and other things, the 3-bar pattern helps you identify actual price, like market structure, right? And in terms of shifts in market structure, trying to validate which ones are actually shifting and which highs and lows are actual important swings or swing highs and lows, you want to make sure you're positioning that perspective on actual swing highs and swing lows that are fractal patterns that use the 3 bars, not 5. 5 bars, you're going to end up late to the party. 3 bars get you in position to actually frame the setups off of the correct market structure. Of course, that's aside from long-term high, short-term high, intermediate-term highs as well. But that also it assists you in identifying that as well, because everything that has to do with ICT market structure has to do with those fractal highs and lows, and it has to be the 3 bars, not the 5, as is traditionally taught. Right? Again, it makes you late to the party if you don't label it correctly. And I found that this indicator, especially for traders that are new, it makes it easier to see actual important price structure, right? And then of course when you're putting your fib, it's very helpful, because if you're in a price like this, instead of using this low to that high and getting the large range, which you should do also, but if you're looking to engage and find more near-term potential ranges of opportunity, or more accurate fib placement, you want to use the most recent fractal low that was energetic after the first initial move took place, right? And you can play with it, right? Measure it out. Use this one, and then just get those ranges and practice that perspective. Because if you put your fib from the low to the high here, and price doesn't go back down to that discount and just takes off, that's going to be the reason why, because it wasn't referencing this swing low to that swing high. It was referencing the most recent energetic fractal low to the most recent fractal high, or the extreme of the range, right? This is one of those things, obviously, you're going to want to back test it. And when you watch how I operate in the marketplace, you'll start to see the importance of that. So yeah, hope that was helpful, guys. So, but yeah, so again, if you guys were with me with the forecast, we said, again, just, to make sure everyone's aware, we were saying bullish bonds, bearish yields. The target draw on liquidity has been this fair value gap down here. If that was to actually show itself, which it clearly is, and then that should translate to the DXY given the intermarket relationships. This could be an immediate rebalance, confirming that potential idea. Reaching for the sell side here. These are relatively equal. It did take out this previous week's low, but now we have a previous month's low. And then, of course, if that does transpire, obviously the indices should just be retracing into this order block to then rally higher. What invalidates this, given what we've discussed in the multiple lives that we've done so far in terms of validation, invalidation? Well, we have this order block. We have a small little inversion for value gap in there. We have obviously this new week opening gap. If we could stay below this new week opening gap here for the current week, that'd be great too. If it was to go lower, but that's not what we want to see. We want to see these levels act as support, given the other relationships that we've discussed and the things that we're merging together to have trust in our potential bias. Okay, and again, if you go from this low to that high, we're at equilibrium, right? So given the fact that we're at equilibrium, the rules state that if we're hovering in that area on the higher time frame, generally that's a reason for consolidation if price doesn't move, right? So again, that's something super important that most people don't understand or overlook, or think it's just, it just goes over their head, right? Because of the lack of experience in applying the tactics that we use, right? So yeah, what we're watching here, based on all the things that we've laid out since the forecast, is we want to see things start to act as support. If we were to run higher, what are the draws on liquidity? What are the targets? Well, we have this previous day's high, right? We have this other previous week's high, and then I think that's a previous month's high from May. So so we have the previous month's low way down here. Okay, we have the previous month's high. Again, if we're going to be bullish, that is what we're going to target. If we do see confirmation that price is going to stay above equilibrium, show support at these levels, and then potentially supported by maybe DXY using this as an immediate rebalance. If that is the case, then we should see these three levels here get violated pretty viciously, especially with NFP, that's what I'm assuming they're gonna target when that news event comes out. And because NFP is ahead of us, although we do have a bias that looks pretty clear, that's supported by many different things, it could pause and wait. Because remember what I said earlier, time is so important. And when it comes to these higher time frame draws on liquidity, in terms of timing, the economic calendar is like your kill zones that we use on the lower time frames, but the economic calendar is for the higher time frame delivery. Because remember, if price moves or is intended to move in a particular direction, it needs sponsorship from the institutions. It needs big time players in the market to push price around. And those news events, those times that the news events come out, are generally when that sponsorship is visual. And obviously we can, that's why ICT says that you can use the economic calendar as a timing tool, right? You can use it as a scheduling tool, because that's when things should deliver, if they are going to deliver, right? And it's not going to be held in a consolidation. Given the fact that, again, we're in summer months, that could lead us to having some harder conditions. So again, you want to make sure that your risk and all this stuff is focused on, as we always amplify in every live call, which I'm going to do every single time because it's that important. You have to make sure that things are in alignment with what you're looking for. That's not to be fearful. That's not to be, making you worried about anything. That's making sure you understand the professional idea that you need to, position yourself with. Not every 5 minutes is there an entry. And every single day there shouldn't be 5, 10, 15 moves that you try to participate in. You only have 2 bullets in the chamber if you're trying to take my advice, or if, like my students that are my mentorship, you only have 2 attempts. On weeks like this, you technically only have 1, and you only have 2 days to participate, especially if you're new, right? Eventually that can change, right? But you have to make sure your skill set's aligned with that adjustment, because if not, you're just gambling. Because if you try to trade without thinking about these things, you're doing yourself a huge disservice and putting yourself at risk, right? That's like going into a battlefield that you have no idea where the enemy's at. I mean, the risk is high, and you don't know what the reward could potentially be, right? So yeah. If you have any questions, let me know. I appreciate you guys hopping on. So yeah. If you guys catch me explaining something or in the moment have like a question, don't hesitate to hit me with a question, or just anything you guys need. Because that's the whole purpose of me even being on this live, right? To give you guys as much value as I can and kind of share some insights that I feel like are very, very valuable. So. But yeah, that's pretty much the whole idea of what we're looking for. This here, this up candle, these 2 up candles. So obviously, if we go to the two day, it's obviously an order block. So we can drag this down there, get a more accurate order block. We also see how this is a large wick here. If you spend a lot of time with me, you're going to see how important wicks are in terms of studying institutional order flow. If price is delivering to the downside, up wicks, right, that price pulls back into, or large down wicks, generally those act as premium arrays if we're going to the downside. So we would like to see if everything's going to fall in line with this bearishness. We'd like to see the midpoints, how the midpoints respond when price trades back up into them. Because that is basically, it shows you, it's one of those signatures in price for institutional order flow, right? When you're reading price deliver, and it's one of those little gems that really stood out to me when I was on either the higher time frame or the lower time frame, trying to piece together the trust factor, right? Pretty much everything that I discuss and lay out is basically trying to reinforce how you can trust, because that's a key element. If you don't know how to trust or what you can use to trust the things that you're trying to impose in the marketplace, it's freaking difficult, and it's already difficult, right? So if there's any way that you can minimize that and have like actual important piece of information that help you in that process, it's literally invaluable. It helps build confidence, helps build trust, and your overall understanding of reading price, aside from when do I take an entry, right? Because entry doesn't matter if you don't know how to trust things, if you don't know how to frame things properly, if you don't know how to validate, invalidate a potential idea, draw on liquidity, entry, so on and so forth. So yeah. So we've already passed the 530 point, obviously. In the 530, if you guys don't know what the difference between the 530 and 630, or what is that, 8:30 Eastern, 9:30 Eastern, the 531, the first one, that's the bond market open, right? And then if you move to the next one, that's the AM session open, like the New York session open. So the 8:30 or 5:30 Pacific time, 8:30 Eastern, that is the bond market open. And the 6:30 or 9:30 Eastern time, that's the open of the New York session. So that's the difference on why ICT uses both of those, because they're both impactful, right? So just a little tip for the differences if you guys didn't know. A lot of people don't know what the difference is. They're basically used in a similar fashion. So yeah, if you get value from these types of lives, definitely go hit that like button for your boy. It really helps the channel out. Again, I appreciate all you guys that come on consistently, because we're trying to keep this growing, right? It's like a family environment, whether it's in my private community or just any of you guys that are supporting me. So I appreciate your time. Is anybody you could be listening to, yet you choose to come on and listen to what I have to say? So I hope you guys get value. So if we're above or below, let me open this up. So if we're above or below those levels, that means which levels? You mean the ones that we're looking at right here? You're talking about like this fair value gap and these highlighted levels? Is that what you're referring to, brother? If this is what you're referring to, bond open. Oh, okay. So, good question. So when it comes to Power 3, I'm not sure how familiar you are with Power 3, but the midnight open and those two open prices that I just mentioned, those are important reference points in terms of Power 3 reference, right? So if we're looking to sell and we want to see a bearish Power 3, obviously the first thing we use is the midnight open or the 9 p.m. Pacific Standard Time open, 12 a.m. Eastern. That is the daily open price. So if we're bearish, we want to see price get above that to manipulate people in the opposite direction and then deliver from that lower. And the best sells would come from above if we're in a bearish market. And then obviously vice versa. If it's bullish, the best buys will come from below that. And after the manipulation lower, before it goes higher. That's why earlier I was saying we want to see the indice go lower to then go higher, because we want to see it get down below either the 5:30 open, the 6:30 open, or the 9 p.m. Pacific Standard Time open, which is the daily open. So getting below either the daily open, the bond open, or the New York session open, all three of those are references to help position or navigate the Power 3 dynamics in a particular daily range. And then, of course, the Sunday's open, that has to do with the weekly range, right? So if we get below, say Monday going into Tuesday drops down below Sunday's open, drops down below on like a Tuesday, drops down below like the daily open, and then we're below the 5:30 open and the 6:30 open, all at a time, near a PD array that's below price in a potentially bullish market. That is a loaded deal, especially if you can couple together this risk on, risk off relationship that I showed earlier. Let me just pull that up one more time. Some of you guys weren't here. So if you take this and then everything that I just described, that's how you can load high probability or start to load high probability in your favor from intermarket relationships, bond yields, and different things like that. Those are fundamental intermarket relationships that drive the market. And then if you can confirm these other relationships, that's a huge step forward in terms of identifying high probability versus low probability. And then of course you merge it with day of the week, right? So there's a couple layering things that you have to eventually work with, and that's what I try to really knock home in terms of these lives and when I work with students, because there's a process to the madness, right? It's not random, obviously. If you spent time with ICT concepts, things are very much delivered like programmed and algorithmic, and all these things that we're discussing is pretty much part of that programming and just how things operate. And obviously, right, it takes a little bit of time to figure out how to merge these things together, how to track these different markets and what things look like when it's valid in terms of these relationships and different things, and when it's not valid, right? And that's why this takes a little bit of time. But that's why ICT concepts are unmatched. Nothing can compare to this, no matter what anyone tries to tell you. Yes, you can be profitable doing other things, but in terms of ICT concepts, you understand the why, the how, the when, valid or invalid, all different kinds of things, whether you're a position trader all the way down to a micro scalper, right? So it gives you all the answers to those questions if you spend enough time and allow yourself to spend the time and dissect these things, especially trying to, if you can get around people that are willing to help, whether that's live on YouTube, whether that's having someone as a mentor, or just, simply, doing what you guys are doing, and just hopping on, listening to someone explain this stuff, and then eventually it starts to stick. Eventually it starts to make sense. But just like anything that's technical in life, whether it's in like a college degree, trying to get some, be a doctor or something, there's a lot of technicalities that have to go with things. And we're basically surgeons in the marketplace. We have a lot of different elements that need to be in place in order for us to have an effective engagement. So the more advanced you can become, that doesn't mean you have to add like 1,000 different things, but the more advanced you can become in terms of organizing your process, understanding even the simplest of things like we've discussed here and in some of the other live sessions, things become a lot more clear, and you start building a whole lot more confidence in terms of the repeatability of your processes, which is obviously one of the main focuses here on this YouTube channel and then in my private community. It's the main focus, because if you don't have a consistent process, if you don't have one model that you're using that you can study on a regular basis consistently, how are you going to have accurate data to review? If you're trying to trade breakers, the YouTube model, 2022 model, optimal trade entry, all these different things, if you're doing all those things at once, trying to learn and backtest and study and try to analyze your data, how are you going to know what works and what didn't work, right? Or what vibes with you and what doesn't, if you're trying to do so many things? That's like going to college and trying to do 500 different things. It's really difficult because you're trying to juggle too much, and versus just becoming a professional studying how to be a doctor, right? For a particular thing. Doctors don't know everything. There's like a brain surgeon. There's like a physical therapist type thing. There's different sections of being a doctor. It's not just, the title doctor means you know everything. There's specialists. So it's the same with this. You have to specialize in one aspect of things. Then as you become more professional with that, you start adding on things that make sense to what it is that you're already trying to do. And you become a specialist. That's why, again, you also focus on one asset class, because every asset, there's no best asset. Every asset can make money if you know what the hell's going on, right? But the more specialized you are, the more easy it is to become profitable consistently, versus spreading yourself so thin trying to trade Forex and indices and crypto and all these different things. It's very simple to just, it's more simple and simplified to focus on one asset class that has correlated assets, reverse correlated assets, things that confirm or negate ideas based on that asset and the relationships related to the one you're trading. And you could become a whole lot more familiar and have a better process with less moving parts if you keep that perspective. That's the professional mindset, which obviously not many people on YouTube or just in the trading community focus on. They want to do everything all at once, every day, all the time. And they get ran over by the train we call the market, right? So yeah, we're obviously seeing this continue to do exactly what we've been anticipating. Lower yields, higher bonds, which should eventually lead us to this being an immediate rebalance to get us down below this low. And then that should translate to the indices basically using this as just a manipulation move. Again, we are at equilibrium, right? From the low that we labeled from here to that high. And you can see justification of what I keep preaching in terms of the anticipation of consolidation and when it occurs. There's a couple different scenarios which I could just lay out real quickly. We are ahead of the open, so we still got a little bit of time to dig into some things. And this is a very important topic. So when the equilibrium level on a higher time frame is being bounced around, that is cause for consolidation. If we see the bonds and the yields consolidating, that's also a reason that things can be consolidating as well, because bonds and yields are the bloodline of the U.S. markets. It determines whether DXY or the indices have the ability to trend, consolidate, or trend or consolidate, right? It also can help you verify bias, right? As we've discussed many times in the last couple of weeks, right? So, and then there's also another factor that has to do with the new week opening gaps. If you have the yields and the bonds consolidating, if we have equilibrium being bounced around the higher time frame, and we're bouncing between multiple new week opening gaps, that is heavily signaling that price is being held, right? It's not going to be a trending environment, so you have to adjust your model, right? You drop your risk, you drop your frequency. And that, it's one of those things where you have to know the condition, right? It's one of those conditional ideas. And if one of those three things is even in place, like say the bonds are consolidating, that can be cause for price to not want to do anything in the DXY and the indices, right? Or if we're just bouncing around new week opening gaps and it's just continuing to bounce, and we see DXY being held, that's going to make it hard for this to want to trend also, right? So I hope that makes sense. It's one of those things, obviously, that you have to write down, and then go study it as price delivers in order for you to trust it and really get the point driven home. But I hope this is kind of showing you, a good example of that, because we are basically bouncing around new week opening gaps right here, right? We have retraced, and we have a narrative that's painting a picture as far as this being manipulation into the order block, which we're coming off of. We have DXY potentially having an immediate rebalance. We have the bonds and the yields showing signals that we're going to continue with lower yields, higher bonds, which is confirming a potential bearish DXY, and then bullish indices, right? So we'll see if that takes place. Remember what I said about the wicks. The midpoint of this wick, right, price delivered lower, couldn't get even to the midpoint. We see this wick here. Price couldn't even pass through or close below the midpoint, while the bonds and the yields are performing exactly how we would like if we were to see sentiment for a continued bullish indices and bearish DXY. Right? So, mind you, all these things that we've discussed, I mean, it's kind of clear that bias, obviously, the whole process of bias and trusting the bias, obviously is a little process, right? And I've been doing this for 4 years, so it takes a lot longer for me to, it takes longer to explain it than it actually does to apply it once you understand, right? But I spend a lot of time trying to give as many details as possible, to try to really drive that home. Yeah, again, if you guys have any questions ever, even if we're not live, just send me questions, especially about bias. I have some videos about it. We talk about it ad nauseum, obviously, in my private community, but I also share a ton of different valuable information that puts you in position also from the YouTube channel, because you guys are part of the family too. Whether you join the private community or not, you guys are still valuable to me as well. We're all a family here, right? So I'm going to pull all you guys up regardless, and I appreciate the support. So yeah, that's essentially what we're looking for in terms of the rest of the day. Again, I got to mention this one more time. It is NFP week. There's specific protocols we have to follow, and I described that in detail in the last live, but I can mention it right here again. Hold up. What are those ticker symbols? Oh, let me pull that up for you. Okay, so the yields, there's 3 yields, okay? And there's 3 yields and there's 3 bonds. There's a 30-year, 10-year, 5-year. And then there's 3 yields, 5-year, 10-year, 30-year. Slightly blurry. Is this still blurry with this one too? Dang, I don't know. Why would it be blurry? That's not good. Can you see this one, brother? maybe I can. Oops. Maybe that's better. So I definitely take a screenshot of these 6, and there's an importance in having all 6 of them, 3 for each, 30-year, 10-year, 5-year, 30-year, 10-year, 5-year, because it's relative when you're observing those markets as a whole to try to find SMT showing between those relationships with the interest rate markets, as individually, right? Because that can signal or help you identify potential changes in trend, as well as quarterly shifts when we move into new quarters, right? So there's a whole process behind that as well. I think I did a fundamental analysis video on the YouTube channel. If not, that's pretty much the importance of having all of them, all 6 of them, 3 for each. So I hope you're able to see that, brother. If you weren't able to see it still, or if it's just like unclear, still just let me know, and then maybe I could screenshot it and then maybe send it to you personally. But yeah, so yeah, now we're moving into 6. So we already have the 550 macro. So let's go observe how that behaved and see if there's anything that we can mine in terms of context. We see the NASDAQ looking like it's starting its potential turnaround. Sorry if you guys hear my dog. He's freaking out. Trying to get in. So yeah, we're going to keep our eyes on this here. We want to make sure that if price does go higher, it has respected the midpoint here, but it's also now respecting the midpoint here, right? So again, it's NFP week. You got to anticipate things not doing exactly what you want sometimes, but we have to keep in mind our validation and invalidation. We have to have trust in the overall analysis that we've done, and don't be swayed because you see things slightly looking a little sloppy, because bias, again, like I've said before as well, bias on the higher time frame doesn't change intensely every day. In terms of intraday trading, obviously there's manipulation and a bunch of different things, and day to day things can potentially change short term. But in terms of like a higher time frame weekly bias, generally that's going to stay intact. And we've been bullish, right? There's not really much showing us anything different, especially with the relationship DXY has and with the yields. Nothing's really changed. That does change though if we get below this fair value gap, if we start breaking through the midpoint of this wick here, and then it definitely changes if we break down below this low. Obviously then the draw would be potentially this fair value gap. But until something promotes that idea, we don't change our bias. We stick to it because this is just respecting this fair value gap. And it looks like it was just a retracement, especially seeing the behavior DXY and the yields and bonds have had and continue to have. Right? There's nothing that changes anything just yet. And this bearish breaker here that we outlined in the forecast, that got broken through, which I said it would likely break through, which is why I didn't trust it. But the fact that it got broken through, especially as aggressively as it has, that's just even further confirmation that we're going to probably continue and reach for the draw on liquidity I have had outlined, which is this fair value gap and this previous month's high. And then obviously the yields do the opposite of what the bonds do, and obviously it looks like it's going to continue to reach for the target we've had outlined here as well. And that translates directly to the DXY being potentially bearish, and then of course the indices potentially being bullish. right? So let's, like I said, drop down to these smaller time frames, kind of observe what we have going on here. We have equal highs here, relative equal highs. We have relative equal highs here. So we have multiple levels of liquidity. We have price dropping down below Sunday's open, right? Which obviously we can see fairly clearly here, right? We have a new week opening gap for the current week. Got it here. Got this new week opening gap for June. So you can see how that also includes Sunday's open. Remember what I said earlier about Sunday's open. If we are in a bullish week, if it's going to be bullish, Sunday, Monday presents manipulation and consolidation. Generally that gets us, in this case, if we're bullish, it gets us below the open, or the Sunday's open for the week. Going into Tuesday, which generally presents us with a low of the week or high of the week, depending on bias. And then generally that'll present us with our continued move either Tuesday or Wednesday, in this case bullish, if everything's going to fall in line. And again, we're at equilibrium on the higher time frame. Everything that we've discussed is still very important in terms of navigation, because it's obviously a game of probabilities. Nobody's perfect, and that includes myself. That includes everybody else, and includes ICT also, right? So NFP can make anything happen, but then eventually it could still fall in line. So it's just something you have to keep in mind. That's not something to be scared about, obviously. You don't just, be fearful. You trust everything that we've discussed because, that's just how the things operate and how they should operate. And watch price and let it speak to you and be patient. Remember, NFP weeks, you only trade, especially if you're new, you only look for ideas on Monday and Tuesday, and then give up the rest of the week and just study. Until you have experience, until you trust yourself, then you can start breaking outside the rules a little bit, right? It's not recommended to do it too heavily because you don't have to even trade on these high impact weeks, and you could still have a wonderful career, less stress, all kinds of different benefits. But if you must trade during these types of news events or these types of weeks outside of the rules, you have to have your risk protocols in place. And what I share and what I teach the students that I help is basically you have one trade per day, right? If the opportunity presents itself. And then you lower your risk by a quarter or by a half a percentage of what you normally use. And if you take 2 losses in the week, you stop and you don't push anymore. Because if you want to go against this perspective, I'm telling you, you've probably witnessed or experienced the pain caused by some of these weeks. And these weeks, at least personally for me, as well as many other ICT, charter students that I've had many conversations with over the years, this is generally the times when they end up taking their losses, if they do take losses, right? Or another thing that's also common is what I discussed earlier. If you choose to trade before the 6:30 open, which is, again, inside the manipulation. If you don't understand the manipulation characteristics and how price uses power 3 and many of the things that we've discussed, not only in this video, but the previous videos, you put yourself behind the 8 ball. And that's when things occur, like you get into a trade, you have the bias correct, but it takes you out because you entered before the open price. Basically getting caught in the manipulation, right? Because remember, time is key. Time. And part of that time element is understanding the manipulation windows, which is obviously, like I said, before the 6:30 open. Wait, oh, you said no and yes. So wait, were you able to get the screenshot of the symbols? I'll probably send the screenshot to you regardless. Or maybe I'll post it on the community tab. But yeah, so we have equal highs here. Okay, we have basically equal highs here as well. And then we also have this high here. So we took out Friday's high. Okay, so Friday's high has been taken from the previous week. Friday's low is still intact. We can see that the 550 macro is now delivering price to the buy side. What I don't like about what we're seeing here is the fact that we have things moving in line with each other, that being DXY and the NASDAQ. We want to see the intramarket relationships fall in line in order to justify high probability or have a portion of justification to high probability or low probability. When things are not in line or not symmetrical, given the list that I gave you earlier in terms of risk on, risk off, that is your first indication of low probability. Then you add on the fact that that the week has NFP ahead of us. Then you add on the fact that we're at equilibrium and just bouncing around, consolidating. All those things put in place share with you the condition we're currently trading in. Not only that, it's the beginning of the month. And if power 3 is used on all time frames for every single scenario, whether you're on the highest time frame to the lowest time frame, then the beginning of the month for the monthly power 3 is generally manipulation, right? So it could start us off with things being manipulated. So that's another thing experience will teach you. But again, it's not one of those things that you should be worried about. It's something to pay attention to and study, right? But yeah, like I said, the bias has been bullish for indices, bearish for DXY. Looks like it's going to continue, and the 550 opportunity looks like it's presented some type of reaction to get us to go higher. We do see a run on stops here. We do see this as a bullish breaker, right? This here is a bullish breaker, and price didn't reach into that. So given the fact that it couldn't deliver into the breaker, this move is something I wouldn't take, even though breakers are my model. It has to come down and validate from my model. But yeah, you can see how everything we've discussed has played out beautifully, right? In terms of bias, right? We haven't been looking at opportunities because we're before the 6:30. So we will. Right, we'll find something to potentially engage. But the most important thing is not when I tell you to enter. The most important thing is, do you understand the process we're going over, not only today but in the previous videos? Because they're all building blocks to assisting you in building trust. That's the main focus whenever we're doing these types of, or just these live streams in general. Because if you don't know how to trust, if you don't know how to validate or invalidate something, it just makes it so much more difficult, right? More difficult than it needs to be. So yeah, we can now see that price is pretty much taken off. We've got a breaker here too. The breaker here on the S&P definitely played out. If we look at this too, I'm pretty confident that we're going to continue being bullish. We also have a market maker buy model here as well. Consolidation, equal highs, right? Drop lower below Sunday's open price. Price is now shifted, created a breaker in here. So now this, inside this range right here, we should be able to see some type of opportunity in terms of a retracement to then see if price can get above. Because we now have, this is a potential second stage distribution. We got the accumulation phases here. So original consolidation, first stage accumulation, second stage accumulation, smart money reversal, right? The first distribution level, right? You see how this was a retracement here on the left side of the curve? Price did the same thing here on the right side, retraced down, created a breaker for opportunity to buy. Now I want to see something similar over here. giving us a second stage distribution to potentially get us above the highs, which are obvious, which are very, very obvious. And mind you, we've been in line with the bullish bias since the forecast that we pointed out or went over. Right, so we got beautiful equal highs. So yeah, we'll see how this delivers. Let's look at some of the other breakdowns. So we do have this inversion fair value gap. We have another one here. I'd like to see us use the inversion fair value gap here. Again, if we just keep pressing through this, it's just further confirming the fact that price is going to continue, and we're going to obviously be correct. And remember what I said about the wicks, right? See this candle here? How price delivered off the breaker. Inside that, from this higher time frame versus the one where the breaker was at, we can see the midpoint of the wick was respected. So institutional order flow is still looking bullish to me. And you lay that on top of everything else we've discussed, leading us to the bullish bias for the indices and bearish bias for the DXY. Everything dovetails beautifully together, right? So, and we've also got below the midnight open, right, which we discussed a little bit about earlier. The 5:30 open was here. Price did drop down a little bit below it, and then prices now continue to move higher. So again, we have many reasons to justify the possibility of price going higher. Now, if we break down below this inversion fair value gap here, that would be kind of sketch, especially if DXY was to rally, right? That'd be kind of sketchy. So that's like a sketchy area. If it breaks and closes below that, this swing low, that's basically 2 PD arrays. And then we also have this fair value gap here. That would be 3 PD arrays broken to the downside to invalidate the timing for price to want to go higher. Currently, it seems like we're going to fall in line, and we can continue to trust the idea that we've been talking about since the forecast was done. Again, we're also at this equilibrium point on this higher time frame. Remember how I outlined that? Price is just bouncing around it, right? But if we could stay above it and respect the levels I've just labeled in terms of validation, then we'll continue to see this deliver as a market maker buy model, and it should be pretty quick from this candle. If it is a market maker buy model, we're assuming that this is going to be the second stage distribution to get us above the highs. And it shouldn't have much trouble getting up there, especially if DXY continues to fall, if the yields continue to fall, and the bonds continue to rally. All right. So yeah, if we could maybe drop down below this, sweep out this liquidity, that'd be kind of nice for us to try to position our potential run-on stops. We could see the YouTube model presented here. That was outside of the timing that I like to see, right? But you can see, drop down below sell side, it created a breaker up here, but before the breaker was created, price manipulated lower, hit the first stage accumulation in the market maker buy model, then presented us with a shift in market structure after run-on stops. Fair value gap, price beautifully delivered outside of the timing, which is part of following the rules. Right, it happened even before the bond open. So is that an idea you missed? Is that an idea we got to be upset about missing? No, because it didn't line up with the rules regardless of the fact that it delivered. Does it make sense, though, how it delivered and what elements are in place? I'm hoping your answer will be yes. If not, leave a question in the comments or the chat so then we can talk about it maybe later. But yeah, now we want to see, can it run stops one more time? Can it shift market structure one more time and then give us a fair value gap to possibly enter using the YouTube model as a continuation pattern, Or is it just going to keep pushing higher and not give us a chance, right? Because that's also a possibility as well, right? But we got to continue watching what this is going to do. DXY is still falling. There's not really any order block to follow. We do have this one that we can label, but if it reaches down into that, that's pretty much a decent idea too, because not only will we have ran stops, we also have a very clear bullish bias, clear framework in terms of this market maker buy model, clearly in the second stage distribution level that should present us with a fast sudden move to get us up above these equal highs here that's in my opinion the drawing liquidity on its way to attacking the liquidity that we've had outlined here, these highs, these highs, these highs. You can also see the volume imbalance that we're also trading within, which is interesting. I don't think we saw that. Yeah, that's kind of weird. It doesn't show on this one. They're the same asset. That is very weird discrepancy. CME? CME? What a weird thing. Whatever. That's weird. So weird. But yeah, so let's see if we can continue to respect this midpoint of this wick. Let's see if we can stay above the 50%. And you can also see we're trading inside this fair value gap, this inversion fair value gap. We're going to use this one. And this again looks like an immediate rebalance. Okay, and that is a signal. If it does present itself and starts printing lower, making a huge wick, that is a beautiful signal in terms of bias validation, because immediate rebalances generally are followed by quick sudden moves to particular levels. And then again, we have news coming at 7, and then again, we're also reaching into the open price for the New York session at 6:30, which is in 6 minutes. So yeah, I hope everything makes sense so far. I hope it's been easy to follow along with. If not, let me know. And maybe we can make some adjustments, because I want you guys to fully understand and be able to follow along 100%. Right, so we see DXY now falling in line. We see the yield still continuing to press lower and do exactly what we've talked about yet again. Now we have this fair value gap here. So let's try to see how that's going to be respected. That may be the launching point, given the fact that this is a potential second stage distribution. When we do hit the second stage distribution and price expands quickly from that area, generally the second stage distribution in a market maker buy model or market maker sell model doesn't like to have deep retracements. It likes to do very shallow retracements and then take off quickly, because it's just, and that's ICT's favorite condition to trade in, especially if everything that we've talked about are layered together. That's, lots of the elements that present high probability, and the less factors we have in alignment with confirmation based on the things we've discussed, the lower the probability is. Right, but this here, I'm pretty much behind the fact that this should allow us to get up above the highs. I appreciate you guys that have liked the video so far. If you haven't liked the video and got value so far, definitely hit that like button. Helps the channel out, and I appreciate your guys' support. So yeah, so yeah, watch that fair value gap there. I know we were looking at the NASDAQ, but I mean it's the same thing with the NASDAQ. So let's watch and see, because the NASDAQ also has the equal highs here too, right? So this also has a market maker buy model as well. This is also a second stage distribution level as well across the board. I like this because it hasn't taken off that much. It looks like the S&P is the lagger. Let's look at these lows to see if there was S&T. So there was S&T. You see that? So that's yet another confirmation tool that we could have used that we didn't point out, but now we can see that's in line as well. So now I have even further convictions that we're most likely going to continue going higher, and this was probably the low of the week set while they engineered buy-side liquidity. So if we measure out from here to there, we got 20-point opportunity potentially. Let's see what this 630 does. One of the rules is I don't like to trade within 10 minutes of the open price. Of the open price at 630, because you can get caught in the manipulation versus just waiting, right, and then seeing what it does and then hopping in line with it. It's another one of those things that played a role in many of the losses I've taken over the last 4 years, along with some of the other stuff we've discussed. But yeah, looks like things are getting excited. Right, so again, this is a second stage distribution. This should be an accelerated move to the upside from this area, and then have a straight shot to the liquidity up there. We'll see what happens. So yeah, watch that little area. It looks like things should follow suit. I wouldn't be surprised if we get one little jolt lower, try to run out a little bit of liquidity while we continue to press higher. That's what we ideally want to see, right? We got the bonds and the yields still following the order in which we're looking for things to operate. So we'll see as price prints through this open price whether that's going to continue or not. And looks like it is, at least for now. So yeah, we got news at 7 o'clock. So let's see what that'll present as well. But I definitely want to see if we can get some excitement to the upside, given the fact that we have had pretty deep manipulation already, and we have a decent amount of confirmation that we should be able to see DXY continue to fall, and then indices potentially continue to rally, especially with these equal highs that were set across the board. So that's what I'm favoring this morning. But again, NFP week, anything can happen. So keep that in mind. So we're waiting. Let's see what happens at this fair value gap here. Let's observe what this is going to do here. Oh yeah, another thing I forgot to mention, to validate or assist in validating potential moves, like I showed on the list that I showed for risk on, risk off, you can also use the currencies to help validate the intermarket relationships. So if DXY is bearish and we want to see things go bullish, this is one of the assets you want to see go in line with that. So that would mean currencies bullish, and then of course the indices bullish with bearish DXY. So let's see if price is going to want to seek stops here before it wants to possibly go higher. Looks like DXY is in line still, so we'll see just how effective that's going to be. We do have, again, this range of distribution here, so we don't want to see it react too aggressively lower if it is going to continue this retracement to go higher. We want to see it start giving us more signals for quick moves to go higher. So we got a vicious move here. We did leave equal highs there. So we'll see what it's going to choose to do here. The Dow obviously always does its own thing, so yeah, as long as our 3 PDA rules respected, as long as the intermarket relationships stay intact, especially when it comes to the bonds and yields, you have nothing to worry about. You shouldn't be doubting yourself. You shouldn't doubt your analysis when things are in line, because that is the process. And if the process is disrespected, right, and or things just look like or things get invalidated, then things got invalidated, right? But if you enter trades, you don't think constantly, oh my God, my stop. You think, are things that I'm still looking for in price being respected or not? If so, and everything's in alignment, you don't think about your stop because it's being paid to do its job, right? So now we've taken out stops. So we don't want to see it close too aggressively down below that. We want to see it, I mean, if it takes that, that's totally fine. Because remember, if price does want to go higher, you want to see something like that occur. You want to see the stops taken. We're inside of an order block, breaker actually here. So we want to see if that's going to hold. So let's see what happens. So we'll see if that's gonna continue. Again, there's many things sharing insights that we're gonna be bullish. So this shift, this so-called shift in market structure, right? It's going against the overall narrative. So unless we start smashing down and break down below this low, we don't try to doubt what the overall narrative is just because it shifts market structure like this a little bit. This is, if DXY continues to be bearish and the yields and bonds continue, that is literally the manipulation to come down, position smart money below stops. We have a breaker here, like I pointed out earlier. So we want to trust that. And given the fact that all the things we've discussed and all the things we've layered on top of each other, like given all those factors, we don't throw away our overall narrative just because something like this occurred, right? We still need to pay attention to our 3 PD arrays. This breaker is part of that. And this is a potential second stage distribution for a bullish move on the heels of a potential bearish DXY. We have a decent fair value gap here in line with the overall bias that we've painted. So let's see how that performs. If we get above this high here, we now have another chance for a potential opportunity to buy. If you didn't trust this one, your next buy would potentially be at this order block if all things remain equal. Again, have I changed my bias? Have I said, oh, we're looking to short now? No, we've been one-sided. We've had the same perspective. I laid out why. I laid out what would make me change my mind and your guys' mind if you're using the same logic or trying to apply the same logic. And we've had conviction even through the face of a candle that does something like this, because it's to be expected, right? It's 630 opening range. I mean, this type of thing is expected, right? And if you're conservative and you wanted to have more so-called confirmation, then this is one of the things you'd wait for. You'd wait for delivery to take out liquidity, and then you'd wait to try to get back in line. All right, so now we just observe and we wait, because that would be my trigger point. So we also have the inversion fair value gap there. So let's see if that's going to be respected too. And so now we have inversion fair value gap. We have this fair value gap here to watch. We want to see us continue to press above that and then continue to press higher. And again, that, if you're aggressive, that could potentially be something to study as a possible entry. If all things stay in line and continue as they are, in a perfect world, this should be respected. It should continue to go higher, and we should still continue to see our second stage distribution delivery. All right, but if we start really holding down below that and then we break through this low, that would be invalidation. So there is one slightly red flag for me, and that has to do with this high. Okay, see this high here, this high. We also see this high and that high. So that's a possible SMT showing weakness in the S&P versus the NASDAQ. So the better buy would come from, if we were going to buy, the better buy would come from this if it is going to be bullish. Otherwise, DXY turns, and then our invalidations to the downside start being promoted or targeted, then that's kind of like the opposing adjustment view. If things like this continue to be respected, and like if this high was to break, that'd be a fair value gap, order block, inversion fair value, or another fair value gap, and then the high here, that's 3 PD arrays. So ideally, we want to see this act as an intermediate term high. We don't want to see that violated. So yeah, we'll see. Now we're reaching back down into the breaker. So let's see the response from there. See how we respond to this. I like this reaction from this breaker here. That's still signifying it can be trusted. Now we got these consecutive up candles. That's an order block, so it should give us respect and push price lower, and then obviously translate to this going higher. Let's see what happens. I really won't like it if we break down below this fair value gap at this point and then close below that. That would be very sketchy. We'd like to see this continue and just continue to press, especially with DXY dropping. That's what we would like to see ideally. We want to see that fair value gap hold. And then this order block here as well. We want to see that continue to hold. Now we have a swing low here. Once this candle prints fully, or do we already have one? Yeah, so once that candle prints fully, we have a swing low. We have fair value gap here, fair value gap here. So we don't want to see it break down below this. And we got the order block too. So it should hold as potential support. Now we see the breaker respected here. We see the inversion fair value gap now being respected as well at this point. So we should have no problem getting up, attempting this high, as long as everything stays in line. Yeah, remember when we have SMT at the highs and lows, we have to observe with the DXY and validate through the DXY. Appreciate you hopping on, Nico. Shit. Let's continue to monitor price. Notice how we are in the opening range and price is being a little tricky. It's not giving us excitement. That's part of what you have to be ready for and obviously be prepared for when you're trading these types of weeks. You want to expect that. And if you don't have the patience to sit through that, at least just yet, or the confidence, then you got to realize that and be honest with yourself and allow yourself to grow versus trying to force yourself in these uncomfortable circumstances. All right, so let's see how our levels will hold. I hope everything makes sense in terms of what we're watching to try to see hold versus what would invalidate the idea. Because currently we're basically using the framework of this breaker and a possible market maker buy model based on the bullish bias derived from what we've seen here in the bonds and yields and how the DXY's behavior is being presented. And we're looking for us to try to attack the buy side liquidity. That's basically the narrative in a nutshell. That's like a quick, dirty breakdown. Missing a lot of details, obviously. But yeah, we could see how it's delivering pretty beautifully now. So again, remember what I said about us getting above that that order block. That then presents us with a possibility from this little zone here to try to frame out something to participate in. Right? If you're confident in me and you're confident in the things we're discussing, not only me, but confident in what we're breaking down and how making all the stuff make sense, then yes, there was opportunities to enter inside this inversion fair value gap. Right? There was opportunity to enter in this fair value gap after it shifted market structure. Right? After run on stops. That's technically the YouTube model right here. But again, does that make sense to you? Are you confident in that? Right? It all depends. Right? So yeah, now we're basically pushing down into this order block again. So let's see how that is respected. DXY is still promoting. So there's really nothing to worry about in terms of bias still. We do see the NASDAQ playing a little bit of games, right? playing some choppy games. So we'll see what happens. We should see fast movement to the buy side if we are correct, because we're in the second stage distribution point potentially of the market maker buy model framework that we've outlined in the bullish market. So that's what we want to see. That's what we want to see things build upon. And again, I'm going to say it again. When you're trading these types of weeks, either ahead of it or after it, especially during these types of news events that are looming around us, you have to anticipate things being less clean. We've made sense of the chaos today, but sometimes it's not going to make sense to you. Sometimes it's not going to make sense, and things are going to be disjointed. It's very important that you use what I've taught today to put yourself in position of understanding. All right. So yeah, that was a beautiful delivery and price. So for context, and yet again, validation that I do take the things that I share with you. Took the entry at that fair value gap here, closed out above the high. Right? 5 points, easy 5 points. S&P, $250, one contract. And it's in my Tradeovate account. If I could make this thing smaller. Right? Tradeovate. Yeah, but it's not important like what I'm taking. What's important is the process. Do you get the process? Does everything make sense in terms of why? Okay, that is a whole lot more important than whether Christian takes a trade, or what's happening in terms of any type of money that I'm able to make. Because the only way you're going to be able to do anything, and this isn't financial advice obviously, but the only way you're going to be able to do anything is if you know how to apply this stuff yourself. And that's the point in how I teach and what I try to do. I try to get you guys to be independent, because you can't be fully dependent on someone else's ideas. You have to be able to eventually be an independent thinker. And Dominic, you're absolutely right. The silver bullet's coming. I took an entry before the silver bullet because my model presented itself, right? But again, now that we're above that high here that we pointed out, that's important. Okay, now that we're above that high, there's that order block to watch. And same with this. If we get above that high, there's an order block to watch. Technically a breaker. You get this candle, drag it over. If it gets above that, the midpoint of that, once it's above it, we don't want to see it get disrespected. And then we're also above the May new week opening gap. We're above the new week opening gap here as well from this current week. So it's respecting that so far. Again, we're at equilibrium though on the higher time frame. So we got to remember, we got to know that that's where we're at, and there's a likelihood that it could be choppy. Plus the news event that's coming in the next day or so. And it's the beginning of the week, and manipulation takes place, and so on and so forth. So that's why I got in. I didn't hold the trade that long because of these other factors. And I mean, $250. Who would say no to $250? One contract, low stress, everything's in alignment, fairly simple. Doing a repeatable process. Who would say no to that? Right? I highly doubt any of you guys would say no to that. Right? So yeah. So the target, obviously, I would like to see us get above there. Market maker buy model, right? I'd really like to see that deliver. If we get down below this low, obviously that invalidates. It breaks our breaker that we're using. and then it also breaks too many specific PD arrays, and that would make it a little more difficult to trust. DXY is still pushing lower. Obviously, we're still not getting much of a reaction, so it just justifies the point as far as why I took profits where I did. I took this little delivery here. It highlights most of the things that we've been talking about. Yeah, so if you guys can confirm with me, did most of the things that we've discussed, does that all this stuff make sense to you? Or if there's any specific holes in what we've been talking about, please let me know, because again, this whole live situation, like everything that I do that has to do with teaching, whether it's mentorship or anything, I know my private students hear me say this all the time, it's all based on what you guys need. Right? So if I don't know the questions you have, if I don't know what doesn't make sense, what does make sense to you guys, it makes it hard for me to cater to and cater to you guys' learning, and make it very specific so it's the most effective thing as possible. Right? Because this isn't just entertainment. This is like, hey, I'm trying to drag y'all along, trying to give y'all the tools, and amplify the tools you guys are learning, so then you can apply them properly and become independent thinkers. Right, so if you could do me a favor and let me know if all this stuff has made sense, if there's anything specific that didn't make sense, definitely let me know, so then I can better serve you guys. Right, because that's the whole purpose, is to serve you guys, not to toot my own horn. Right, could care less about all that. So yeah, it looks like everything is still in alignment. Right, it looks like everything is still delivering according to plan in terms of the bonds and the yields. Looks like this is still looking like a immediate rebalance. So we want to still see, can we stay above this fair value gap? Because if it breaks through this, even if it breaks down below this fair value gap and this swing low, that is very sketchy. Right, because there's multiple PD arrays. There's an order block here that we outlined. There's inversion, inversion, another inversion, right? Swing low, order block. Like if it just smashes through that price structure, and then obviously closes below this breaker, those are all areas signaling that obviously something is not right. So you wouldn't marry your idea in that case. Again, thank you to all you guys that have went out of your way to go hit that like button. I really appreciate it. And again, I hope you guys are getting a good amount of value from this call, and I hope y'all enjoyed the other ones as well. So thank you guys. So we're still seeing decent reaction off of this. Now all we need to do is see the indices fall in line and follow suit, right? Come on, indices, stop playing games. All right, so now we got to continue to observe what's going to happen here. We got to see. So we want to see us stay above this ideally. Right, so this is not, we don't like this. We don't like this. We like that, that's for sure. That's definitely something nice. So that could be giving us an X-ray view. It's signaling the fact that the NASDAQ and the S&P versus the Dow are showing weakness, right? Showing strength in the Dow. All right, so going into the silver bullet, it's looking like it's really attempting to like test our invalidation levels to the downside, right? The last line of defense is this breaker, right? The midpoint of this breaker, we do not want to see that taken out. To trust the current situation that we're looking for to see price go higher. Remember, we wanted to see this have a quick action to the upside if it's going to be a market maker buy model, second stage distribution. Right now, it's not giving me confidence in that potential idea. Although it may still work out, it's lowering the confidence every time it's breaking these PD arrays. So we've already broken 1, 2, 3 PD arrays. Right? If we get down below the midpoint of this breaker, we're definitely it definitely has lost my trust for the current time being. And then we're in the 650 macro. So let's see if this retracement in the DXY can potentially just set us up for something to go lower and then maybe kick us back into overdrive to go higher. The trust comes back into play for the bullishness in the moment currently if we get us above this fair value gap one more time and then possibly stay above that. See, what are the yields doing? Everything is still in alignment, so there should be no doubt. It's just the timing may be off. Remember, we got to get above this. If we get above this and we can stay above it, then the trust is obviously not lost. But if it was to hit this and then start attempting this midpoint of the breaker, I wouldn't be fully confident. But again, if we can get above this, I mean, especially if we get above this, these two lines here, that's our order block, remember? It is on the 5 minute. So if we can get ourselves above that, that's beautiful. We're at this midpoint of this order block here. So let's see if it respects that and then possibly gives us this wick. Hopefully it respects this wick midpoint and then uses this fair value gap still and then continues to push us to the downside. We've left equal lows here, which is a good sign. Right above a fair value gap. So that's something that I like to see. So let's see if we can maintain above this. Beautiful. 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 Look at that. Look at that. Look at that. Just took some time, right? Took a little bit of time. Beautiful. Beautiful. And again, now we see Amp Live. So I took one on Amp Live as well. Right? Trusting the overall breaker, trusting the first idea, trusting everything that we've discussed. Of course, the trust was beginning to be lost, but remember what I said, the last line of defense, which would make me totally not trust the idea, was that breaker midpoint if we closed below it. We stayed above the order block midpoint that I pointed out. Right, if we go to the S&P, I said if we stay above that, that's a good sign. We've talked about the market maker buy model. All right, if it broke down below that, our second stage distribution would be lackluster. But you can see how the second stage distribution kicked in. It just held because of the news event. But you can see for another live straight narrative navigation, ideas that have been given in terms of potential opportunity and potential validation and invalidation levels have all been intact, have all delivered beautifully. And again, I hope that you're starting to see the consistency in what it is that we do here. My private students see this on a daily basis, right? Anyone that's been on the YouTube channel that's known me for the last 4 years, at least from the last 3 consecutive. The first year was horrible for me. It was obvious. I mean, that's kind of how it is for everybody, right? But in terms of bias, navigation, in terms of discipline, in terms of the mindset, in terms of how to operate as a professional, and how to succeed full-time, and the things that are required, from trusting your bias to operating this as a business, all that stuff has been showcased and continues to be showcased and will continue to be showcased until I get as many people as I possibly can to their own goals. And again, I hope you guys have gotten value from this. We're going to stay on probably for another hour just so we can observe, maybe point out different things, answer some questions, and whatever else I can do to help you guys. But my engagement, my personal engagement, is now over with. That doesn't mean that I'm not going to give you guys ideas to study. Because remember, even if you miss these ideas, there's still going to be possibilities that you can utilize to get back in line with things. Right? Just because this delivery was delivered doesn't mean that there won't be another opportunity to possibly catch if this is to continue. So the overall forecast also that we did, so I point this out, the overall forecast that we did, yet again, has proven, just like I said a second ago, that there's validity to all the things that we're doing. There's some serious consistency shown, right? And of course, it could be shown more on YouTube. I'm going to try my best to keep getting on YouTube as consistently as possible, while also making sure that my private community gets what I'm obligated to give them as well. But yeah, again, I hope that you guys have gotten value so far. So yeah, let's jump to any potential questions, because I want to make sure that things are sticking, and the only way for me to know that is for you guys to let me know your guys' thoughts. So Dominic, if you're still here, Jones, if you're still here, does everything that we've discussed so far make sense throughout the forecast? If you watch the forecast up until the things that we've talked about currently, and then of course the ideas that we've basically kind of walked through in terms of delivery. Or if anybody else obviously has questions, you could pop those in and chime in as well. So let's keep tabs on what we're seeing here. So we do see this failure here to get above this high. Now after that news event, let's come and look at what's happening here. So we saw a quick push on the yields, right? Hit the midpoint of this wick, and now it's kind of responding off of that. And we've also made equal highs here at the previous month's high, which again, that was the draw on liquidity for the week. I've been pointing that out since the forecast, right? And the breaker got violated, as I said, further amplified the trust. And then obviously the yields have been following suit as well. But again, we're seeing a potential failure to get up above this high, and that's also in line with this one as well. But we see the Dow showing more strength. Whether that's significant in terms of things turning around, I'm not 100% behind that, because we have other factors showcasing that things may continue. But we're gonna obviously have to see how things continue to play out. Right? So again, if it breaks through this breaker, this midpoint of this breaker, this is not obviously something that we like. If we break through the order block, the swing low, and the breaker, those are three significant PD arrays that would change our overall sentiment for the current price delivery we're seeing. Right? So we're back inside this distribution area, second stage distribution. Let's see if we can get this to just be a retracement into, is that an order block? Let's see. So there's no order block there. So yeah, if the DXY was to break this high, that is also something that's not indicative of us continuing. Right? So we got to observe that. We have a fair value gap in here that was created. So let's see how the response is from there. Obviously, you could see the very whipsawy action, the really slow, lethargic delivery. Only one price delivered to this high here was it fast, and then obviously the entry I took down in here that I showed earlier from my Top Step account, that was also an opportunity and got us above the high here. Right, but it's been very slow. Now we got a whipsaw action going on, and then now DXY is reluctant to continue, and now we're coming off the low for the yields, and then we're coming off this high after setting equal highs. That is indicative to me of price engineering liquidity. Now they're pulling price lower, trying to fool people that change their bias every 5 seconds from a higher time frame. And that could come back to bite them because the news event that's coming out tomorrow, which is obviously part of NFP, right? And then of course we have the actual NFP on Friday. So again, the rules remain in terms of engagement with this type of day. You got to have one attempt, right? One attempt. If you take that loss, you stop. You don't go back in. If you take 2 losses in the same week on NFP week, you don't attempt anymore. Why, you may ask? Well, why are you going to push when clearly you're taking losses already and the conditions promote higher difficulty, right? Why would you logically push when you don't have to do that, right? And yes, we all want to make money. Yes, we all want to do this or do that. But why make it harder than it needs to be? You know, why push yourself too much, right? When you don't have to. Right. So again, we failed to get above this high, which is obviously not what we wanted to see happen. We wanted to see this continue. It looked like it was going to, but as NFP generally does, the NFP weeks generally do, it went up there, faked people out, and denied them, right? And now it's breaking through levels that we don't want to see broken, which is obviously this midpoint of this order block. We don't want to see that. It's not what we want to see, right? And now it's attempting to break this low, right? So we're going to study and see what's happening. If I didn't take a trade, what would I be doing right now? Right? I'd be doing exactly what we're doing here. I'm observing and I'm watching what is going to be attacked, what is going to be respected, what is happening intermarket relationship wise. Well, throughout the morning we saw bonds going higher, yields going lower, but now we've hit the midpoint of a higher time frame wick after a news drop. And now it's coming off of the wick there, right? Pulling back. So when would the next opportunity, when will we seek another opportunity? The next macro, right? The 650 and 7 o'clock macro delivered the move that we pointed out, which was the one trying to get up above this high. The 650 to 710 macro delivered that beautifully above a buy side liquidity, right? Where if you would have taken an entry, that's an idea that's nice, right? Like I showed you the entry I took. I took one there because I trust the things that I do, right? And I've done this process that I'm trying to share with you guys for years at this point. So obviously it takes a little bit of time, right? But now it's came off of that, and now that opportunity is being squeezed out, right? And this is a typical characteristic to observe, right? It's one of those typical things, right? So now, if I didn't take an entry, I'd be doing exactly what we're doing. I'd be sitting and waiting. Now we're seeing the DXY completely turn. We're also seeing the bonds come off the high after setting equal highs, which in my opinion is engineering liquidity probably for NFP, because it still hasn't reached this fair value gap, which is obviously being targeted. We do have an inversion fair value gap here. Okay, so maybe it reaches down into that. Right, let's go up in time frames and see. We could see that there's this large wick, right? You measure out the midpoint. I've already have it outlined. So that's a level that we can watch for price to reach down into. And then we also have this order block here as well. So those are levels to watch. We did mention from the forecast, well, I'm probably not going to go through everything I mentioned in the forecast, but in a nutshell, we were trying to observe this hold, which obviously took place. And I said if we get above this, it was going to hold as well, probably reach for the fair value gap. And then the trend line liquidity potentially. Right? So all of that is still valid. All of that still is in play. Right? So, but price is now coming off this high here and coming off this low, which is now translating to DXY, basically giving us this aggressive turn. And then now we're seeing our validation levels get attacked in terms of the levels we were using to trust the continued buy side. It did deliver an opportunity like I showed, right? Entered 2 entries on 2 different accounts using the same narrative to try to get us above this market maker, potential market maker buy model. That market maker buy model, at least for now, has failed, right? But it did deliver something profitable, right? It did deliver something executable. But obviously that's something that you'd have to reason with yourself. Was your model there? Was there something that you trusted given what we've talked about? Right? If not, then you have nothing. You don't need to sit there and think you missed anything at all. Because, that's like being mad about someone else going to their job, getting a paycheck, and you didn't get paid. I mean, that's not your job. You don't work at that job. Just like if someone takes an entry that wasn't your model and they make money, you feeling like you got left out or missed something is like you feeling left out or like you missed something because someone else went to their job and made their paycheck and got paid, and you're jealous about that, or you're mad about that, or upset about that. Right? Logically, in that perspective, it makes no sense. Right? Your model is like your job. Your model is what you're looking for. Right? The logic that we share, or that I share continuously in terms of narrative and different things, those are the things that you want to try to emulate and try to apply to your own trading. And then the model comes within the context of understanding the navigation skill sets that I continuously try to impose on you all. Right? That comes obviously directly from ICT and the years of experience I have applying the logic. Right? So yeah, now we have a run on stops here. DXY is pushing higher here. Again, this may be manipulation inside the greater grand scheme of things. But currently, there's nothing that I would personally want to trust. If you were to look at this and say, oh, maybe this is a sell. Well, what about the higher time frame narrative? Has the higher time frame narrative changed? No. Has our last invalidation level changed or been disrespected yet? No. It's came back to the breaker, the one that we used to position ourselves to try to get up above the buy side liquidity, right? So we have to observe, we have to reason with it. If you were to take this as a sell against the higher time frame bias that we've discussed and all the things we've talked about, you're counter trend trading, you're increasing the higher risk, right? And going against the higher time frame, which could turn around and bite you, right? So again, if I didn't take a trade yet, If I wouldn't have taken the ones that I've already taken, I would not be interested right now trading against the trend while price is still at equilibrium, right? From the higher time frame, right? Can't forget the things that we talk about, right? And going against pretty much everything that we've been discussing. If this was going to be the change you were trying to take, it would be invalid, obviously, because our last validation level was not disrespected, right? So I hope you guys see that, right? And now you can kind of see what's happening here, right? Why that statement has validity, why these levels I'm pointing out are so important in terms of, things that you should be watching, right? In terms of validation, invalidation, right? So you see how the equilibrium here from the daily that we outlined, how that's acted as a magnet, pulled price down, squeezed out people that were trying to buy early, right? If I was greedy, I would have lost. But knowing my rules, I was able to take away some decent profits, right? In two separate occasions. From this run higher here, getting above this high, I took the profits out, right? Secured 6 points. Then price ran up above this high, and then I took those as well and got out, right? So that's part of the rules when you're trading NFP weeks. You want to make sure that you are nimble. You want to make sure when the market offers you something, you take it. If it's above 5 points for the S&P, if it's above 10, 20 points for the NASDAQ, you take that and you sideline. That's how you accumulate the profits, and make sure that it's above, obviously, 5 for the S&P, above 10, 20 for the NASDAQ, because that's generally what your stops are going to be depending on that asset, right? Because obviously there's a difference in speed with NASDAQ, so you have to increase the stop a little bit. Doesn't increase the amount of money risked, right? Or it shouldn't increase the risk, but there is like a little adjustment. But that's why you solidify one, focus on one, and then use the other ones as confirmation as you try to learn, as you study one model, right? Because you want to be able to get accurate data. So yeah, now the buys are still valid, right? They'd still be potentially valid because the last line of defense has not been taken. Now again, if it breaks through that again, obviously the bullishness is still being played with, right? Let's go move up in time frames and see what exactly the DXY has reached for here, right? So I mean, just looking at price, you can see how manipulation is heavily present. Manipulated lower to squeeze out any people that bought, right? And then now they also rallied up above into this order block, still respecting the midpoint, right? So that's something to study. And we can just see how sloppy nonsense, this looks, right? But that doesn't take away from what we've talked about, right? We also see a breaker here, right? Consecutive up candles, drag this out. And now it makes a little more sense why they drop down to this particular price level, right? Took out sell stops, took out buy stops. So that is your dealing range. You would go from this low to that high in terms of this current range. And we can see not only is it dancing around the higher time frame daily overall range equilibrium, it also reached down into the breaker, reached down below the 50% of this current dealing range, right? Which was aimed for specifically to get down to a discount. And then it failed to get down to a discount again. And now we're continuing to try to press higher. Ideally, we'd like to see it continue because of the market maker buy model and everything we've discussed to trust the bullishness. Nothing has changed overall. I have not changed the bias, one way or the other. It's the whole day has been directly one-sided, as it generally is, unless pointed out otherwise, right? And the validity still is present for us to trust that. Not to engage, because obviously things are not positioned right now for us to find anything, at least for me, to try to enter, because of, you know, how things are acting. But the overall narrative, the overall validation, invalidation for directional purposes, I hope it's understood, right? So we can try to look at this. Let's see if DXY can now break this low. If it breaks that low, like aggressive, and then maybe we can see a response here to try to go higher. We have set equal highs here now, so that's pretty significant, right? And that's also in line with the market maker buy model, in terms of them leaving that like that. If we could see DXY kick back into sells, that would continue to be something we'd aim for. But again, clearly it doesn't look like they want to do that, right? So again, if I didn't take the entries I showed earlier, I would have nothing interesting to look at, or to trust in terms of getting back in line with our overall narrative, which has been bullish indices, bearish DXY, right? So again, if you guys are just hopping on, if you could hit that like button, if you've been getting value, it definitely supports the channel, and I appreciate the support. So thank you guys that have liked the video. And again, if you guys ever have any questions, you can leave them in my comments. You could DM me, and just reach out, because I'm more than willing to help and answer questions. All right? You're not alone, okay? And no questions are stupid, by the way. Some people are embarrassed about simple questions. That's a very, very good way to make it so you continuously be stuck, right? And, you know, so yeah, let's see what happens here. Ideally, in order for me to trust buys again, like I said, I'd like to see us smash through this. Otherwise, it may continue to try to push up. If we look at the daily time frame, we still have a little bit more to go to get to this previous wick from Friday to fill in the rest of the immediate rebalance signature potentially, right? So it could be attempting to do that. It did obviously reach down below previous week's low, and it's not unreasonable for them to want to retrace like this. But again, does that change our overall narrative? It's not enough to change this higher time frame view. It's just not. Right? And this has been the overall sentiment from the forecast. Right? So that's what we want to favor. Bullish bonds, bearish yields, that equals bearish DXY. Right? So what changes that narrative? What changes that bias? Well, if you've been here for a little while, the last couple weeks, I think at this point, a couple months, the 3 PDA rule, right? We got to make sure that we watch and observe the PD arrays that get broken to the upside, right? So none of that would change, obviously, unless something significant happens, pushing price all the way up here, right? We have a midpoint of this order block. This is the 2-day order block, right? So blowing past the midpoint of this inversion fair value gap, and then obviously attempting to snatch this high would change the overall sentiment in the market. It's been bearish, so the bias is bearish for DXY, and you can see getting us up to there would take time, hence the validity of the perspective that the higher time frame bias and narrative does not change all the time every single day. Sometimes in a bearish market there will be bullish opportunities, obviously, because things retrace, but the overall sentiment structurally in terms of what price is doing in the narrative as a whole, I hope that this simple visual here and explanation shows you why you need to trust your higher time frame bias when you come to a determination, right? But day to day, obviously, navigation, you want to use the liquidity list that I gave in one of the other videos, and then of course the 3 PDA rule to change overall sentiment or validate overall sentiment changes. Right, so So again, we're still respecting the second stage distribution area. So it looks like they're accumulating positions where it was accumulated to the left. Remember, if we smash through this low here, that's significant, right? In the overall grand scheme of things, it's still bearish on DXY, bullish on the indices, right? Because again, just to highlight the point, higher time frame doesn't change every 5 minutes, right? Doesn't change even daily. Sometimes it's got retracements, but that doesn't take away from the higher time frame narrative, right? So you trust your bias until proven wrong. When are you proven 100% wrong on the bias on the higher time frame? If the validation principles get violated, right? And obviously in this case it would take a while for that to happen, and you would stick to your bias being bearish until that changes. And your experience navigating how price delivers will assist you in navigating day to day for bias, navigating retracements inside of, at least for this example, the bearish move, navigating bullish moves and bullish biases. That's going to come from experience, right? It's going to come from you understanding how price moves from expansion to consolidation to retrace, or from expansion, retracement, consolidation, expansion, retracement, consolidation, right? And how all that operates in its, delivery. So yeah, here we go, kicking back into the potential bullishness. Notice again how I pointed out the equal highs that were left, and notice how the market maker buy model has been in position. Notice how the first accumulation, or the second stage accumulation, translated to a first stage distribution, which presented the breaker, which we took this entry off of, right? And now we're accumulating. Clearly this is accumulating. It's consolidating in the same area that we have this assumed distribution, or the first accumulation on the left side of the curve. We can see how the response is showing. That's signaling the fact that this is in fact a market maker buy model. All the levels and signals are in place right now, right? It's accumulating buys most likely. We don't like to see this happen when we're inside of a second stage distribution area potentially. We like to see this. It gave us that, and the participation was engaged upon, which I showed you, right? The fact that it's slowly doing this makes it more difficult. Obviously, that's another testament to the fact that the conditions are a little more difficult, and you got to rely on experience and pause and wait till you get that experience before you start gunslinging. And you guys are absolutely doing that by sitting here observing what I'm sharing with you guys, right? It's building off my own experience and lending it to you, and I'm walking you guys through my thought process. So hopefully it's giving you guys perspective that you maybe didn't have before, giving you insights that you maybe didn't know before. And hopefully it's pushing you forward, because that's the goal. Right, so now we got these consecutive down candles here. We have this fair value gap. We have the low of that fair value gap. Right, we also have this fair value gap here that could be dragged out. Maybe if we go to the 5 minute, we'll have a bigger one. Yep. So we also have this order block here. We have this one and this one. So both of those, could be used as potential support levels as price continues to print. Right? These consecutive down candles, price is printed lower. Observe the wicks, right? Observe the wicks here. Is it going to respect that midpoint of the wick? Is it going to respect that? Let's observe. We got this fair value gap here to drag over as well. And again, we also have this from that order block earlier. Right? So we got multiple levels of possible support. We got DXY showing that it wants to get below that low that we pointed out. Let's see if it gives us aggression to continue pushing lower, so that we can continue to trust us at least getting us above these highs here. Remember, watch the wicks. As price prints in a direction you're aiming at, watch how price responds to the wicks. It gives you valuable insights in terms of reading institutional order flow. And it may be confusing, this topic, because then you'll think, well, what happened in here, right? Well, you got to couple it with narrative. You got to couple it with when price is expanding, right? If it's consolidating, then obviously the wicks are going to be hard to measure. But if it's expanding, that's when you want to apply that logic. Okay, what are the wicks doing in this expansion leg, right? What are they doing? Is it supporting it, or is it bouncing back and forth? If it's doing that, right, it's consolidating. It's hard to read that, right? But when it's moving in one direction and you have a bias, that's when you want to apply the wicks. Look at the wicks. If you're trying to trust the setup, say you find a setup and you're like, this is a possible entry, right? And it's expanding. That's when you apply the logic, right? There's a time and a place for many of the topics that ICT teaches. And this is one of them that requires you to be, aware of the situation in terms of, application of this particular idea. So now we got a fair value gap here we want to study and see how that is respected, or if it's not. You see how we're using the upper portion of the accumulation on the sell side of the curve, right? Using that as a potential support. Now kind of slid through it, right? Just look at the mess we got going on here, right? Now we came back to this order block, so let's observe how that responds. It did violate the wicks that I've been telling you to pay attention to, and that little tactic. So guess what? Because it's violating that, because we see the current delivery and price, obviously it's showing it's a little more difficult. We've been pointing that out. The fact that there's a possibility of things being a little more difficult, and now it's visually showing you that as well. Again, there's no ideas. If I didn't take a trade, there's no ideas that I would be trying to enter. All right, so let's go back to the bonds and the yields. Looks like we're now potentially gonna try to run up. I'm not fully confident that we're gonna get up above this today because of the news event that's coming out tomorrow and Friday. It may want to save that. The more that they can hold price below that, the more liquidity they can build above the highs, as well as in this fair value gap here. But once it gets into this fair value gap, I mean, we could see a really strong one-sided move to go and fill in, especially the longer that they wait, the more aggressive the move will most likely be, in my opinion. And of course, it's NFP, right? NFP, FOMC, those moves are freaking insane, right? Slaughterhouse. And so let's observe how this order block is going to be delivered. Right, price did pull back into this order block, right? And now we're coming off that low. So again, that gives me less confidence that this is going to be significantly pushed above, or at least trustworthy to push above. We got this wick here. Let's observe how that is responded to inside this order block. All right, so let's just watch that. So yeah, again, invalidation for today's bias is getting down below the breaker midpoint here. Right, it starts getting red flaggy if we get below this order block's midpoint, especially if we start attempting to get down below this low, and then especially if we break down below the midpoint of this breaker here, because then that's our 3 PD arrays, right? I mean, you can even consider the wick here, the midpoint of that wick, use that as a discount array. So then technically you'd have 4. If you want to include the midpoint of this wick too, you could have 5 PD arrays that get violated to further justify the fact that this is not ready or trustworthy to continue to try to go higher at the current moment. So if we go to this, we still got the SMT intact. So again, that's another factor. All right, so now price is dropping. So there's also SMT at these highs here. Right, so how do you validate whether an SMT is going to be valid? I talked about this in the other video, I think maybe the last live stream. If you have SMT, whether you have 2 or whether you have 1, you want to use the DXY. If the DXY is bullish, then any bullish SMT would be invalid, and you'd potentially be able to trust bearish SMT as long as your bias and narrative is in alignment with that, right? And then if DXY is declining, any type of bearish SMT would be something that you wouldn't want to trust, right? So DXY is very, very important for many reasons, right? And then you validate DXY with the bonds and the yields. And if DXY is confusing, if it's not being very clear as far as what it's trying to do, you go to the yields and the bonds to verify, to find more clarity, and then you can use that as well, similarly to how you use the DXY to assist you in understanding the navigation for the indices. You can use the bonds and yields if the DXY is playing games, right? Ideally, you want all of them in alignment. That's how you start approaching higher probability. So I hope that makes sense. All right, so now price came down into the order block there. All right, these consecutive down candles. Came down to a fair value gap here, so let's observe that fair value gap. Study how that responds. DXY is now falling. I mean, if you just look at price, look at how much sloppiness there is, right? Although we did enter, or I did point out 2 opportunities that I took and was able to walk away with, it's very high risk. Look at all the wicks. Look at how price is delivering. You got to ask yourself, realistically, be realistic with yourself. Is there anything you would have felt comfortable with aside from maybe the ideas that I pointed out early on? Right? You really got to be honest. Right? So again, the bias hasn't changed. Remember, I said that if the bias is disrespected if we break below this breaker. Has that changed? Have I said, oh, we're going to start selling? No. Right? And obviously, it's just taking forever. Typical for NFP. Right? Yeah, this retracement into there. So we got 750 macro coming in. Remember what I said after the 7 o'clock idea we took? After I showed you guys that, I said the next idea would be taken when? In the next macro, or considered in the next macro. Has the bias changed overall? No. Price has just been sloppy. It's not been trying to move because it's, for one, it's not in the time for it to move, and second, right, price is being held, right? Clearly, it's being held in the accumulation, the first stage accumulation, right? And it's now accumulating further buys for smart money, squeezing out anyone that was in the buys, and now potentially going to give us that one-sided move. We broke down below this low. I said to watch that. Price retraced back into a premium. You go from high to low. It went up to a premium, in the fair value gap that's above equilibrium from this high to that low. And now it's delivered from there. So now this, if it is going to deliver, we're approaching the 750 macro as well at the same time that this is occurring. So just piece together the timing element, how important that is. And this is a beautiful example of that. We got consecutive down candles here. Maybe that presents an order block. It does. So maybe when price gets above this order block here, maybe that'll act as support. It did respect the order block here. It's also respected the order block here that we pointed out from earlier in the session. So it's respected that one. Price is wick lower. It's respected this one as well. So both of those. And now price, if it can get above this order block, maybe that'll be the launching point for us to possibly have a study setup to reason with getting above these highs here. All in the context of the same narrative, market maker buy model, right? Everything's been intact. Nice, bro. I appreciate you being at work and still participating, brother, and just listening in. It's valuable because it's not always about entries right away, right? There's a lot of logic in between that even if you hear it and get exposed to it, you can start applying. Right? Vu said he's at work listening and he's learning a lot, and you're welcome. And thank you as well for being here, lending me your ear when you could be watching any other YouTuber, anybody else trying to, spew their opinions on people, right? Just to show that they can enter a trade. Here it's a lot different, right? It's a lot different. It's trying to get you to understand why. Not, hey, look at me, I'm able to be consistent, because that doesn't do anything for you. Instead, it's, hey, look at this, so then you can apply this and you can take care of your family eventually. Right? So yeah, appreciate you for hopping on, Vu. Appreciate you. Let me know if you have any questions. If you don't follow me on Instagram, definitely follow me on Instagram, WMG Trading, and you can shoot me DMs there, or you can throw questions in the comments and stuff. But again, thank you to all you guys that have spent the last couple hours here. We are going to close the session at 8 o'clock, as we generally do. Generally, our ideas obviously pop out within that time frame from 5:30 to 8. So it's like a 2.5 hour, sometimes 3 hour window. And then, of course, we utilize the silver bullet because, if all else fails, if we don't find any ideas, generally that's going to be a good time window because the manipulation takes place. Things are able to get seasoned into the overall bias and daily range, and then the delivery becomes a lot easier to read. So yeah, let's continue to watch and see if this is going to be respected. Watch the midpoint of this. Let's see if the DXY can use this as this order block here to then try to press lower. And then in the same viewpoint, let's see if this order block can also hold. And then potentially for the rest of the day, maybe get us up above these highs, which have been the draw on liquidity the whole morning, along with, of course, the previous month's high on the bonds and the fair value gap and the lows here on the yields, which, as you guys have seen throughout the session, has indicated bearish DXY and a trustworthy bullish indices, even though we've seen a lot of choppiness. But I've expressed how you need to be viewing this, how you should be navigating, no overtrading, right? No forced trades. I shared 2 opportunities that I did take and got what price gave me and got out, because that's part of the rules for my NFP, FOMC, rate announcement, so on and so forth, the rules I apply for those scenarios. You take what you can get. You don't look for home runs. It's better to be the person or the trader that's able to take 5, 10, 20 points on a consistent basis than to be the trader always looking for home runs, having a 5% strike rate, who takes losses constantly but banks on that one home run to fix everything. It's much less stressful and easier to attain consistency and reliability in your process if you look for those low-hanging fruit targets and can do that consistently. At least that's my perspective, right? And it's worked for me and many of my students, right? So again, we're approaching the 750 macro, so let's see the delivery that's going to present us, given the fact that we're inside this order block here, given the fact that we also have an order block here as well, and that's also inside this other order block, right? So we don't want to see price break through the midpoint of this. Again, we have a wick here too, so keep in mind the wick idea that I've shared, right? Watch this wick. If we want to get it above there, part of the justification in trusting the move going higher has to do with the wicks too. Not only these PD arrays, the traditional ones, but also how the wicks are delivered. Is it going to respect the midpoint of this wick? If so, that's giving us more validation points to utilize to read price, to read whether price is going to respect what we're trying to see or not, right? Got a wick, the same wick here, and we also got a order block here, but on the 5 minute. So let's see the midpoint of that wick. Let's see the midpoint of this order block. So we got this wick, we got this order block, and then we got this low. We got this low here as well. All right, so it doesn't look like, given what we're looking at, it doesn't look like it's going to want to be fruitful, right? So we'll see if that changes in the next 2 minutes. And if not, again, that would put me on the sideline for the rest of the day. And just look at it. Look at price, right? If we didn't knock down those 2 entries, right? If we didn't observe this and take profit, or if we didn't observe this and take profit, there was possible opportunities, right? Maybe you could have taken this one, and that would have been fruitful if you continued to trust the higher time frame bias that I've been sharing with you. There was obviously opportunities. Imagine if you were trying to sell, right? Probably would have got eaten up, right? Given the fact that price hasn't moved a lot, right? It's been very lethargic in its delivery. That can fool you. That can really go against your confidence because it's not moving. And when you enter a trade, obviously, first thing we want to see is price just take off to our target right away. And obviously, that's not necessarily the things that actually occur, right? Especially in this type of week, things sometimes end up obviously not going according to plan, right? But again, that doesn't mean you don't trust your higher time frame bias. That doesn't mean that you go and disregard everything that you found on the higher time frame just because the 1 minute is looking a little difficult. You have to remember the 1 minute is subservient to the parent higher time frame, right? So the bias on the higher time frame is always going to outlast and be more significant than the lower time frame potential target or draw on liquidity. The lower time frame works within that higher time frame. And then navigation skill from that higher time frame bias all the way down to the lower time frame, including the retracements and all that different stuff, that obviously takes a little bit of time, right? And doing exactly what we're doing here, watching and studying how things deliver within that larger time frame bias, through different time elements, so on and so forth. Right, so we see DXY falling. If you did have a sell perspective that you were favoring, if you did have that idea, because the DXY is falling too, you can't trust it, right? all the bullishness with this bearish DXY, all the bullishness is still intact. The validation levels are still intact. Higher time frame still agrees with what we're trying to see, right? So everything is still intact. We're now inside the 750 macro, so this may have all been a holding pattern, building liquidity inside of this accumulation on the left side to then build more distribution opportunities and entry points for smart money to try to get us up above this buy side liquidity. And it's just killing people in there that are impatient, that don't have the ability to pause and wait and observe and understand what's actually going on. Right, so let's see if we can, in the next couple of minutes before 8 o'clock, have that delivery and price to get us up above the high here. Alright guys, so I guess I actually have to go. Totally forgot I have an appointment. So again, I hope all this stuff made sense. Keep in mind all the things that I've basically given you guys to observe in terms of validation, invalidation, what our higher time frame bias has been, and all the other things that we've discussed, right? Maybe go back, watch a couple areas of this video a couple of times, along with the other ones, because there's a lot of gems about validation, invalidation, bias, trusting your bias, discipline, and just a laundry list of other things. But yeah, I appreciate all you guys that have hopped on. Again, if you haven't liked the video yet and you got value, definitely like the video. Share it with a friend or two. If you think that you know somebody that this type of environment can benefit, you'll definitely be doing them a favor as well as doing me a favor. And I greatly appreciate your guys' support. And we will be back live again on Thursday to go over how things go. I may go live tomorrow, or if not tomorrow, definitely Thursday and most likely Friday too, so we can walk through navigation of NFP and observe how it's a two-stage event, and then maybe potentially see some steady setups even within the chaos of that news event itself. All right, no worries, brother. Thank you for hopping on as well. Again, I greatly appreciate you guys that consistently hop on and show support for the channel. Watching you guys grow and helping you guys in any way that I can, seeing your guys' progression, and helping you guys get to your goals in terms of clarity. I can't promise profitability, but I can promise that if you stay showing up here, just like the 100+ students that have come to me in a private capacity, how they've gained clarity, I'm very confident that you guys will also start to gain a whole lot more clarity until you get to the point where you could also walk on your own. And keep me updated with anything that you guys progress with. Again, if you guys have any questions, let me know. I'm always here to help. And again, thank you so much for the support. Thank you for hopping on consistently. And I will see you guys either tomorrow, definitely on Thursday, and then possibly on Friday. So yeah, with that being said, you guys, thanks again. And have a good rest of your day. Be careful. Don't go crazy. And I will see y'all next time.